Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, April 1st, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I will start with the big picture as always and work my way into the day itself. This is a weekly bar chart that shows roughly an 8-month channel structure, close to 9 months actually. The top of which is 240.93. We tested that actually in late December, culminating with the sell-off that resulted in a testing of channel support that is presently this week at 161.40. Now, something did occur about 3 weeks ago, and that was the settlement below that channel support by, yes, the required 1% margin, but it was the following Monday that we reversed, gapped right back above it. It held the low for the week, and since that rejection of a long-term sell signal, which is in essence a valid sign of strength over the near to mid-term time horizons, we've been anticipating recovery into this 191.64 to 198.55 region. 191.64 is a descending channel top over the last 2 to 3 months activity. 198.55 is a newly formed descending one-third speed line based on the July high of last year against that recent low of about 3 weeks ago. These are both trend-defining resistance areas. This is a very sellable zone that is still expected over the next several weeks, possibly over the next several days if we close today, for instance, above 184.83. So you've got 194 even on the daily chart. That is the daily version of the weekly at 191.64. So I'm going to take us back to the daily chart. And now we're kind of talking about the day itself and really into later week as well. 184.33 we did test early last week, fell away from it. We spiked through it, of course, but it is the point that if settled above would then indicate or yield that targeted 194 even channel top. That could be within a day, it could take several days, but it would be later this week that we should then yield 194 even, which is part of that structure of resistance I mentioned on the weekly chart that begins 191.64 and ends at 198.55. This area able to contain buying through the month of April. And from here, we can fall back within 3 to 5 weeks to 161.40. As I've been mentioning, we could fill this wedge out for the next month or two at the most before one would presumably give away either to the downside by closing below 161.40 or to the upside by closing above 198.55. The likelier outcome, by a hair, not a significant margin, would be a settlement above 198.55. And that is just because of the longer-term nature of the 161.40 channel bottom, the fact that that sell signal was rejected. It may actually have longer-term implications up to 240.93 over the next 3 to 5 months, perhaps. And once again, it would be a settlement above 198.55 that should yield 240.93 inside of 2 to 3 months, where we could top out on a quarterly basis by that point in time through the third quarter and into later year. And that is kind of the dynamic. But, can you reach for 235 or 240 strike out of the money calls that don't expire for at least 6 months? I would go a year out on that if I were to do that. Yes, you can. But there doesn't seem to be a clear emphasis for that. I would rather buy on strength. And I do think that if we were to close above 198.55 over the next few weeks, let's say, that is your signal for a greater likelihood of reaching what would then be in the 220s or 230s as this is dropping on a weekly basis. Now, I think you could scale into something like that and then load up on the rest with a settlement above 198.55. That is certainly a possibility. But until then, this is an area where we could top out through April into May, fall away, and then who knows? We would probably fall back to 161.40. Let's talk the downside now. I'd mentioned how the 184.83 channel top is our upward pivot point into later week. There's also a very similar channel bottom at 174.24 today. That is our downward pivot point into later week. So 174.24 is a solid day trade level, able to contain session weakness. Talking to day traders, 174.24 is also a 3 to 5 day swing trade. You could bottom pick 174.24 in anticipation perhaps of 194 even over the following 3 to 5 days, as this 184.83 formation is rising at over the next 3 to 5 days. It'll be in the 190s, I suspect. But, they're two different formations. And so buying 174.24, you can hold out 10 points higher for 184.83, 2 to 3 to 5 days later, which is climbing on a daily basis. You could also buy 174.24 in anticipation perhaps of 194 even by the end of next week or sooner. Now, if we close below 174.24, if we break 174.24, we just have minor points on the way down. 171.84 just might snag daily selling pressures following a violation of 174.24. But if we close below 174.24, I am anticipating a retest of the low 160s. 162.93 is on the daily chart. What is on the weekly chart at 161.40, which I show here. And if we were to test this area, 161.40 to 162.93, and once again, I am expecting as much if we close today below 174.24. So if we do happen to test this zone, 161.40, you've got 160.51 is the actual move low from several weeks ago. This preceded the sort of head fake back to the upside the following Monday. I still like, let's say a couple things about here. I need to unpack this just a bit. First off, the 1% zone is 159.78 this week. In other words, you know that if we have line studies that go back further than 6 months, I do like using 1% violation thresholds for what I consider to be kind of a technical reliability or technical clarity, and that should then yield follow-through selling back to the 101.81 January 23 low. But it's probably well worth waiting for that, 159.78, but they're so close. I feel as if it doesn't make a big difference. If we close below 160.51 at the end of this week, regardless of whether we close below 159.78, I do think that is a meaningful follow-through sell signal. No good reason to be long Tesla, in my opinion, as we move through the rest of the second quarter and into the third, because I do think over the following 2 to 3 months, over the next 2 to 3 months, we should continue south to 101.81. And that is part of a range that is ever widening. I don't know if we show it here this week. I don't think we do, actually. Let me see here. Yeah, the point we're really trying to make here is 117.84 precedes it. But this is converging with 101.81 anyway over the next month. So at this point in time, it really is anticipating the low 100s again if we close below the 161.40 formation at the end of this week. Yes, closing below 160.51 is sort of the barrier that we also need to close below to set off that sell signal. Until then, this is still bottom picking territory as we move through April trade. We can from here round back up into the low 240s, dropping weekly over the next 3 to 5 months. That can becomes more should if we close above 198.55 in the coming weeks. This 191.64 to 198.55 region in reach this week if we close today above 184.83. Until then, I don't see a real strong directional inclination for the day. I do think you need to respect the upside inclination through the rest of the week above 174.24. This area not only able to contain daily selling pressures, but possibly into later week. And if we close below 174.24, we're setting up for a retest of the low 160s. And we will keep you informed of those exact price points as we move through the week, because this is a daily analysis. That's why we call it the Daily Tesla Report. I think that pretty much rounds it out. Please click like, share, subscribe. Check out wickedstocks.com. Offer 2 stock picks every week. I'll be back tomorrow with Tuesday's Tesla. You have a great day.